Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I am Yatin Mota.
Yatin, of course, the 14-day run that we had seen on the Nifty has come to a halt today, although we did recover quite significantly from the day's low, over 100-point recovery coming in on the Nifty, Yatin. After opening lower by about 1.5% or thereabouts, we did manage to end a shade below that 25,200 mark. But, all the dips, as we have seen in the past as well, getting bought into. So, although it was a broad-based sell-off, we saw the mid-cap index and the small-cap index as well staging a very good comeback. In fact, the small-cap index is marginally, just about marginally in the red. So good recovery coming in from the day's low. But of course, the mood was pretty sour today thanks to global cues. Last night we saw the Dow slumping by somewhere around 600 points. The Nasdaq, I think, plunged by 3% or thereabouts. Of course, semiconductor stocks or chip stocks were the biggest culprits there. One wonders how much weight that Nvidia, one stock has. That was down 10%, and that kind of changed the entire texture of the market when it comes to the US markets. Asian markets were also reacting, and so did we, but we did well to come out of or come back from the day's low. India VIX jumped somewhere around 4%. The breadth was fairly even, 1:1, but it was tilted in favor of losers. PSU banking lot was the top loser, followed by IT. But IT at the start of the day was down somewhere around 2% or thereabouts. It did well to recover slightly, in fact, recover from the day's low and end just about 1% lower. But what really came to the rescue once again was the FMCG and pharma pack. Yatin, all the sectors were in the red at the start, but FMCG and pharma, saw good buying, and both the sectors ended the day in the green. In terms of gainers, we'll talk about crude also a bit, in a bit, 5% down overnight. Brent below $73 a barrel, and that of course came as good news for paint counters, OMCs as well, and even tire stocks for that matter. So if you look at the Nifty, top gainer was Asian Paints. Even cement stocks were doing well, so Ultratech and Grasim were among the gainers, and FMCG, from FMCG, HUL was the top gainer, and Apollo Hospitals, Cipla, all these stocks were doing well. On the flip side, IT, as I said, was among the biggest losers. So Wipro down 3%, Coal India, ONGC, metal counters were also under pressure. So Hindalco, M&M, some of these names were under pressure. But Yatin, broader end of the market saw quite a few higher flyers as well.
Absolutely, and we have the defense stocks and pharma stocks leading the way on Nifty 500. In the defense space, we had stocks like BEML and Mazagon Dock doing well in trade, almost 7% higher for both of these stocks. In the pharma names, we had stocks like PPL Pharma and Jubliant Ingrevia. Both of these stocks are gaining by nearly 10% each. And in general, today was a good day for pharma. Even stocks like Biocon were flying in trade. What was not doing well is Oil India. Obviously, the slump in crude prices does not augur well for the company. Shares were down 7%. GIC Ray. And remember, the government of India is doing OFS. Post that, the stock fell nearly 6% in trade, close to the floor price of the offer, which was around 395. RBL Bank, after the Morgan Stanley downgrade, also down by about 4%.
All right, just about want to mention a little more details about crude prices, Yatin, before we move on to the stocks. Of course, crude prices fell by 5%. In fact, US crude slumped below that $80 a barrel mark. Crude in general hitting a 9-month low. In fact, we've had data coming out of the US and China as well. And China as well, no really concrete signs of recovery, right? The manufacturing data that came out of China was below expectations. And even the fact that OPEC members may be looking to boost output by 180,000 barrels per day in October, that would mean a lot of supply coming in the market, and that could put pressure on prices, especially in the wake of lower demand from economies like China, right? So that is something that is a cause of concern, and that's why prices are falling. And even the some bit of resolution is in sight when it comes to the entire Libya situation, where they could bring back production as well as exports. Aside of that, dollar index also at 2-week high, so that also doesn't bode well for commodities. So all these factors, and also the fact that we are waiting for the US non-farm payroll data on Friday, and there are recession fears in the US once again, which led to the sell-off that we saw last night. So all in all, crude prices falling, although is a good thing for India, right? Because we use crude in our as a raw material in a lot of industries, which is why we saw paint stocks gaining anywhere between 2 to 7%. Indigo Paints, if you see that stock was up 7% or thereabouts. OMCs, HPCL was up somewhere around 4% or thereabouts, and the tire stocks were also gaining on hopes of margin boost as oil falls. So that's one of their raw materials. So all in all, those crude related stocks did see good traction on a day when the markets were slightly weak. But Yatin, in terms of stock not recommendations, what stocks do you have on your radar today?
So, pipe companies, that is one space to watch out for. Today, we have Jefferies, which has come out of the report with a buy call on Supreme Industries. The target here is 6,520. Obviously, they have a whole target on, Astral, wherein, the target is 2,115. Now, if you look at the last 6 months, Supreme has rallied nearly 26%, whereas shares of Astral Pipes is down nearly 7%. The reason being Astral is already at a valuation which is quite high according to analysts, and the outperformer call on Supreme is on the fact that the pipe SKU count is nearly 14,000, double than that of Astral. So the good range of pipes and products has probably given them a good advantage in terms of growth. And if you talk about Supreme Industries 2-year volume CAGR, it is nearly 33% versus 24 for Astral. So the catch-up rally is happening as far as these PVC pipe manufacturers are concerned. Supreme Industries, as we know, has been a wealth creator, a multi-bagger stock. So clearly, the market focusing on the value chain as well as the kind of competitive advantage now Supreme has over Astral. Astral also has done well. They are getting into new categories of products also. But yes, in the shorter term, probably the stock has underperformed, and hence the Morgan Stanley and Jefferies buy call on Supreme Industries coming in.
All right, that was about some of these pipe stocks, but focus in on bank stocks. Morgan Stanley has come in with a report on banking, and they have turned cautious, and they've said that it is time to get selective when it comes to the banking sector. Stick to the large cap private names. Yeah. That's the kind of message that we are getting from Morgan Stanley, because PSUs and mid-sized private banks, compared to these pockets. Private banks, large private banks have valuation comfort, and even in terms of profitability trends, they have an edge. That's what Morgan Stanley is saying. And the divergence in profitability is largely based on franchisee strength. Margin and asset quality are expected to normalize, but in the next few years. And of course, large private sector banks are expected to do well, according to Morgan Stanley. Profitability for select mid-sized private banks actually could move below the cycle average before the NPL on non-performing loan cycle turns. And then post that, there could be a reversal in profitability and it could normalize. The key catalyst for banking going forward would be regulatory changes as well as turning of the rate cycle, which of course hasn't happened yet. Margin remains a challenge for banks, and of course we've seen deposit growth being fairly tight, and that could also be a challenge, and high competition would also be a challenge for the mid-sized private sector banks. ICICI Bank, Kotak Bank and Axis Bank remain the key picks for Morgan Stanley from the large private sector banking space. If you look at Federal Bank, they have downgraded this stock to underweight from equal weight. Stock in fact reacted to that. It has fallen the most in 3 months today, Yatin. For other banks like SBI, PNB, Bank of India and Canara Bank, they have cut target prices, but they have equal weight to underweight kind of rating there. So all in all, cautious, that's the tone when it comes to banks from Morgan Stanley. But I think another counter that was doing well today was Jubliant Ingrevia. Yeah. Stock has jumped to a 3-year high. In fact, it has received positive credit rating from India Ratings. Aside of that, Equirus Capital has come out with a report, and they have reiterated their positive or long rating on the stock with the target price, which is at 900 rupees, implies a 25% upside from current levels. The trigger, well, global specialty maker Vertilus has shut down pyridine production in the US. Now this pyridine is a solvent primarily used for paints, rubber, pharma and other products. In the pharma industry, it is used as to treat neurodegenerative diseases, plus as well as antibacterial and anti-infective properties. In the agricultural sector, it is used in the production of agrochemicals, herbicides and the likes. Equirus in fact has said that rising niacinamide prices due to higher pyridine costs, these are some of the things that would help in near-term profitability because the company produces both of these, and because of the customer inquiries, they are also targeting the semiconductor industry where they are supplying samples at the current juncture. So all of these large contract wins could bode well for the company and make it come closer to its FY29 target as well. In terms of earnings, Yatin, the company's earnings were a tad disappointing. Revenues declined 5%, profits were down 15%, but management had assured that FY25 will be better for all three segments: pharma, agriculture as well as CDMO, which is why Anand Rathi also had a bullish call 1 month back, and they also saw a 20% upside. And now, of course, because of all these developments, even Equirus has a long rating, and they are fairly bullish on the stock. The stock in the last 1 month itself, Yatin, has rallied somewhere around 20%.
Absolutely, and pharma and API intermediary stocks are anyways doing well in the marketplace, and clearly it's a market which is at all-time high. So, probably there is some buying in the defensive space as well as pharma stocks to balance the portfolio from market risk.
Well, then I think this wraps up our show for today. We did, see some bit of a blip in terms of, global cues. But let's see how US markets behave tonight, and that will be crucial because today we did manage to recover from the day's low, but who knows tomorrow, if we hold above that 25,000 level, that's the base that a lot of technical analysts are speaking about. If that breaks, then of course there could be some bit of trouble on the horizon. But for now, it's a goodbye from me and Yatin. Thanks a lot for watching. Stay tuned to Money Control for all your other news and updates.